Hi everyone, it's great to be here. My name is Jack. Today I am talking about credit analysis. Analysis. What is the credit analysis? Credit analysis is the process determining the ability of the company person to repay their debt obligation in other world in this process of determining professional credit risk and the default risk. The corporation both qualitative and quantitative factors. Quantitative credit analysis uses the company that issue the bond or the stocks and as well as the individual who take out the loans. The company that issues the bond and the stock as well as individuals who take out the loans, the terms and more clicks in the credit analysis certification of the program. The summary, the credit analysis is the process that determines the way to the company individuals to fulfill their financial obligation. The process contains both quantitative and qualitative factors such as the amount on the characteristics and the capacity to make the payment. The credit analysis to the used to determine whether the company or individual qualify for the loans or mortgages. Also used to determine the qualify quality of the bonds. Uses for the credit analysis, the credit analysis is important for the banks, investors, and investment fund as the corporations. Tired to expand used to the way of the rise capital. This is achieved by the using bond, stock, and the breaking out the loans when investing and the lending money, the deciding whether the investment will be pay off the often the depend upon the credit company. For example, the case of the bankruptcy, the lender need to the assess whether they will be the paid back. Similarly, the bondholders who lend to the company money are also assessing the chance they will be get their loan back. Lastly, the stockholders who have to the lowest the claim priority assesses the capital structures of the company. Determines their the chance of the being paid of the course. Credit analysis also use the individual looking to take out the loan of the mortgage. The credit analysis is used by the credit to determine the corporations between ability to pay the back loans. The credit determines of the individual ability to pay back the loans mortgage. The investor is determinants of the corporation's financial stability. The investor determines the corporation's financial stability, the commercial banking and the credit analysis, CB and CA. The credit analysis for the loans. When the corporation is you need the capital, it can ask the bank for the loans. Bank and the creditor can be secure and unsecure as briefly the mentions before there is an order to the priority from the claims during the bankruptcy. Secure the lender that lenders have the first claim on the asset use as the collateral. They are followed by the unsecured creditor. Of course, the creditor would be the like avoid the bankruptcy scenario, which is why they utilize the credit analysis process to determine the corruption, the ability to pay the back to the loans. Loans is also given by the individual. Now, individual also go through the credit check. For the corporate loans, the 5 CS, so the credit of the often user determine the credit quality, the characters and capacity, the capital condition, collateral for individual loans. The credit score are also used for which include the payment history, the amount on the length of the credit history, the credit mix, the new credit, the bond. The bond overlook of the corporate's bonds rating the determines of the default risk, the popular rating system. Ready? Bond are the ranking high, the investment grade have low default risks. Those who are no investment grade are called high yield of the junk bond. They are depend on the favorable business, financial, and economic condition to meet the financial commitments. The company that already has the high level of the debate will be have lower bond rating as they are considered to have the higher level of the risk. The bond holder usually behind of the credits of the claims priority. So in the case of the bankruptcy, they have the less claim on the company asset that and other persons why had a high level of the existing debt of the risk. The equity invested by the stock in the company to benefits from the rising the stock price and from the individual. Divided the character of the company affected the investor in the two ways, the value of the stocks and the claim on the assets. Firstly, the value of the stocks depend on the growth and the sustainability for the company. Balance growth and the stability is important and the debt pay to the role. The debt can be the drive the investment and the grow, but too much debt will the decrease the stability of the company. If the company has too much debt and then the stock value will be increased due to the lower perceived stability. Higher debt can be the significant that there is a higher risk the company will not be able to satisfy the financial commitment and the stock price will the drops. On the other hand, if a company has no debt at all, the investor will wonder how the company has the ability to expand to the grow. If not, then the stock price will be the appreciate credit analysis help to determine the both the growth potential and stability of the company. The second concern of the equity holder about the credit equity quality to claim on the asset. The equity holders have the least claims on the asset of the company. In the case of the bankruptcy, if the company goes bankruptcy, shareholder will be get the claims only secure to unsecured credit did not already to the take all the remaining asset. This is the wise travel to for the existing debt in the important for the equity holder as well as additional resources. Thank you for the reading CFC the article credit analysis to keep the learning advancing your the career. The recommended to the following the author resource the credit event and the leverage loans and the credit analysis reduction and the financial analysis and the credit analysis combined out of these are the financial analysis trainings the get world class financial training with the CF the online the certificate the financial analysis training from gain to the confidence you need to the learn financial modeling while you're access to easy way to with step by step training the equity. The credit, these are the credit analysis. So today is enough about the credit analysis. Thank you so much.